Hi everyone, Emmy Dent here, your favourite mortgage advisor. Today's video is on debt. How much is too much? Do I need to be debt free to get a mortgage? I don't have any debt, is that going to be an issue? Please help me. So let's start on what I like to call the big D. No one likes to say how big theirs actually is. It's such a subject that no one likes to discuss. We don't talk about it with family. We sometimes don't talk about it with our spouse. It's almost like saying the word debt is a nasty word and we all pretend like we've never had any ever. Why? Who knows? But I'm going to tell you how it works on a mortgage. Little disclosure before you start watching, if you've missed payments on debt, so any missed payments, defaults, CCJs, this is not the video for you. I'm just talking to people who have never missed a payment on anything or haven't missed anything for a long time, generally keep up to date with all of the debt. So that's the people this video is aimed at. So let's get started. What does it affect? Should I be debt free to get a mortgage? Will it give me a better chance of getting one? To be honest, no, it doesn't matter. What it affects is your affordability. So depending on how much you earn and how much debt you've got, that will give the banks a certain number. They will say, Mr. Joe Bloggs can have a mortgage of this much, taking into account his income and his debts. So if you are tight on affordability and you need the most you can borrow, then having debt's not going to help. Bit like if you had someone on $20,000 a year, but they've got a £600 car payment. If that same person didn't have the car payment, of course you're going to get a higher mortgage because you've got less outgoings. But officially, that is all it affects. So, will you get a better interest rate if you don't have any debt? So I see customers all the time where they go, I've got £600 on a credit card, but I promise I'll pay it off. Please don't tell anyone. I promise I'll pay it off and it'll be gone before the mortgage goes through. No, the banks aren't bothered it's there. As long as they've factored it into your affordability, it doesn't matter. So you will not get a worse or a better interest rate by having 2 credit cards versus someone who's got none. It goes off your deposit. That's how the interest rates are controlled. That's a different video. So don't worry about it. At the minute, the banks are wanting such a high deposit that in certain circumstances, you're better off keeping some debt and putting more money into your deposit, but speak to a broker and work out if that's going to be worthwhile. So what about if you haven't got any debt? If you're a first-time buyer, you've never had a credit card, you don't have any debt, what do I do? Please do not go out and take 10 credit cards and think, I need some debt now, oh my God. Please don't do that. Having one credit card that you spend on, put your petrol on and pay off each month, that is going to help. But if you haven't got any, don't panic. Speak to a broker who basically shops around and says, that bank over there is better for a low credit score. That bank won't take it. That's what we do. That is our job. So don't worry. Also, do not ever, most important bit of this video, take a payday loan to build your credit. It'll stop you getting a mortgage. Just don't do it. I've seen it happen in the past where people have gone, oh, well, I needed debt quickly, I paid it straight back. Banks don't like payday loans. Again, that's in a different video. So, what do you do to check your affordability? You speak to a broker, a bank, you can do online calculators, and you basically put your income in and put your outgoings in and work out how much of a mortgage you can get. It's worth mentioning that if you've got a £500 car payment, and you're on the same income as someone with a £500 a month childcare payment, you're going to get the same amount of mortgage. So it's not worse that you've got a car on finance and they've got childcare. It's just an outgoing. The banks just want to know you can afford to pay the debt and pay the mortgage. Missed payments are different, but that's what they're looking for. So if you've got any questions, please get in touch. If you want your affordability check-in, please get in touch. One of us guys will be able to do it for you. And please like and subscribe on your YouTube channel. Thank you.